Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. I bought shares of Rivian stock earlier this year on the thesis this could be a really successful electric vehicle company, has a ton of cash on the balance sheet that they're investing in building out more manufacturing and ramping up productions. I really like the risk reward profile versus a company like Tesla. But if I made a mistake, I've started second guessing this investment for a few reasons, and a lot of those have happened just in the last few weeks. So today I want to get into why I'm reconsidering this position. I'm not selling shares yet, but I think whether you're long or you don't own this stock yet, it's worth considering both the bull case and the bear case, because I think that bear case has gotten a little bit stronger with Rivian. So let's get into that. My name is Travis Hoium. Thank you for watching RIV Investing. Please subscribe here on YouTube and give this video a like as well. Let's get into a couple of things that have changed with Rivian over the last few weeks. The first really comes down to Tesla's price reductions earlier in January. Now, we saw some discounting that they did in December, started with a $3,700 discount to take delivery in December, trying to push those deliveries into 2022, increase that all the way to $7,500. A lot of people thought that was because the EV tax credit was going to kick in for Tesla in 2023. So they were trying to make those prices basically match. But then in 2023, they actually reduced prices for all of their vehicles across the board, even though that $7,500 investment tax credit did hit in the United States. Reductions were as much as 20% for some vehicles. What that tells me is that Tesla has too much supply and not enough demand for its vehicles. Why is that important? It's important because they're saying that we want to increase volumes and sell as many vehicles as we can, and we're willing to forego profits to do that. As a competitor to Tesla, whether directly or indirectly, Tesla is going to have to respond. We have already seen that Ford has reduced prices for its Mach-E, which is a competing product to something like the Tesla Model 3 or Model Y. Now, Rivian doesn't have a direct competition with Tesla, given it's making a 7-seat SUV and a truck. But especially with the Cybertruck coming into the market and the high price of Rivian's vehicles, I think this could put pricing pressure on Rivian. Now, we have not seen this pricing pressure move its way into the traditional auto market where Rivian is competing against mid-size SUVs and trucks, but this is definitely something to keep an eye on. One of the things that I'm looking for specifically with their earnings report coming up here later this month is, what do those reservation numbers look like? Are people dropping off that reservation list? We have seen Lucid's reservation numbers actually falling, indicating that demand is falling for them. Do we see the same happen at Rivian? That was not the case last quarter. They actually increased reservations at a pretty nice clip, but does that reverse? We will learn more later this month, but that's something that's absolutely on my mind. Related to that is competition. The competition in the electric vehicle space is simply getting better and better. That's part of the reason that Tesla had to respond with pricing. In the case of competition with Rivian, we're starting to see some companies come online, at least announcing vehicles later this year with ramping up in 2024. So a few to keep an eye on are General Motors launching a Chevy Equinox electric vehicle. We know that Chevy already has a full-size truck in the works. Ford has the F-150 Lightning, which is selling really well right now. That's going to be a direct competitor to Rivian with its R1T. And then the other one that I'm intrigued by is the ID.8. So we have seen Volkswagen have a lot of success with the ID.4. It's a really compelling vehicle, especially the design. They're copying some of those features with a little bit bigger vehicle with what they're calling the ID.8. We don't know a lot about it at this point, but production likely to start sometime later this year or in 2024. So Rivian is ramping its production at a time that competitors are doing the same thing. What does their supply and demand, their pricing dynamic look like as we look out to 2024, 2025? It may not be as strong as it is today. That is worth putting into your investment thesis. The other thing that I'm questioning is the expansion that all of these companies are doing in the electric vehicle space. I think there is going to be a cap on the number of electric vehicles that are going to be able to be sold both in the US and then around the world over the next few years. This is not a transition that's going to happen overnight, despite the fact that all of these companies are ramping production as quickly as possible. Rivian is building a new plant in Georgia. We don't have a ton of details about that, but this is supposedly a $5 billion plant that will eat into the company's $14 billion in cash. As investors, what we need to get an idea of is what's going to be built there and where are they going to be sitting in the competitive landscape. If this is going to be a lower price vehicle, is that also going to be a lower margin vehicle? It's easy to see Rivian as a potential value right now, given the cash that's on the balance sheet. But if it's not able to deploy that cash and generate returns, that's going to be money that's burnt for investors. So management really needs to tell us a lot about how operations are going and how those operations are going to be expanded over the next few years, because there's a lot of money going into the business right now. Another thing is that Rivian recently laid off 6% of its workforce. For a company that's expanding production, this was kind of a jarring announcement. I wasn't expecting it. You expect to hear this from companies that are trying to improve their profitability, maybe right-size the company. But Rivian is a company that is growing as quickly as it possibly can. So where did those people come from? What were they working on that is no longer needed? And why is Rivian at the point with $14 billion in the balance sheet needing to save cash? Management will clearly have to talk about this on their conference call, but I have a lot of questions about that. And that was a worry when I saw that announcement. Now, this is a fast-moving market, and I'm a long-term investor, so I'm not panicking and not selling shares of Rivian yet. But these things that have happened over the last month, Tesla starting a potential price war, a reduction of 6% in Rivian's workforce, and then the competition getting better and better and getting closer to production, these are things that I am thinking about a lot more as I look at my shares of Rivian. And I have more questions today than I did less than a month ago when I bought the stock. So something for you to think about as you look at Rivian stock. What do you think about where this company is positioned? What are you looking for in earnings? I'm going to be covering this here on RIV Investing, so check back after earnings for that. There's a lot to cover with this company and stock. Thank you for subscribing to RIV Investing, and I'll see you here next time.